You ever feel like you're playing a game but nobody ever gave you the rules? Yeah, that's what handling money can feel like, right? Well, today, we're going to change that. We're going to finally break down the world of finance and give you the rule book you were supposed to get. Let's get into it.
Think about it. You get that paycheck notification, you're feeling good, and then you look at the actual number, and a huge chunk of your money is just gone. Poof! Before you even had a chance to say hello to it. It's like some kind of magic trick you never signed up for. Well, today, we're pulling back the curtain on that trick. We're going to show you exactly where that money goes, and more importantly, why.
All right, so here's the game plan. We're breaking this down into 5 key parts. First up, what even is money? Then, we'll get into those invisible price tags, the forces that are always working on your cash. After that, we'll talk about your financial reputation, because yeah, you have one. Then, we'll learn how to ride the economic waves without wiping out. And finally, the best part, how to actually put your money to work for you.
Okay, let's dive into Section 1. What is money anyway? We're going from your very first paycheck all the way to the bank.
So, what even is money when you get right down to it? It's kind of a weird concept, isn't it? At its core, money is just a social construct. I mean, a dollar bill, a Bitcoin, even a shiny gold coin, none of it has any real value on its own. The only reason that piece of paper in your wallet can buy you a coffee is because we've all decided to believe it's worth something. It's basically a giant global game of trust. And guess what? We're all playing. All right, let's look at a real-world example. Say your gross pay is $2,000. Awesome, right? But hold on. Before you can even think about spending it, those invisible forces we talked about show up. We're talking taxes. Federal tax, state tax, Social Security, Medicare, they all take their slice. And just like that, your $2,000 becomes about $1,456. Now, yeah, that's the price of having roads and schools and all that, but man, it definitely stings when you see it disappear. So, you take that paycheck and deposit it in the bank. You probably imagine it's just sitting in a vault with your name on it, right? Safe and sound. Well, not exactly. See, banks aren't really storage lockers for your cash. They're more like financial matchmakers, and they use a system called fractional reserve banking to send your money out into the world. Here's a super simple breakdown of how that works. Let's say you deposit $1,000. The bank is required to keep a small piece of that, a fraction, on hand, in reserve. But the rest of it, maybe $900, they immediately lend that out to someone else. Somebody who wants to buy a car, or start a business, or fix their roof. That's actually what keeps the economy moving. Our savings become the loans that fuel everything else. So your money isn't just sitting there, it's out there making things happen, and of course, making the banks some money too. All right, Section 2, the invisible price tags. We're talking about the forces that are working for and against your money 24/7. Your money is never just sitting still, and we need to understand the 2 biggest players in this game, interest and inflation. Seriously, these 2 can be your best friend or your absolute worst enemy.
Yeah, interest is totally a double-edged sword. When you're paying it, like on a credit card or a loan, it is your worst enemy. It's the price tag you pay for borrowing money, and it can be brutal. But when you earn it, oh man, it becomes your best unpaid employee. It's the reward you get for letting someone else use your money. The whole game comes down to this. Are you on the paying side or the earning side?
And this is where it gets really, really cool. Let's talk about compound interest. This is basically the financial world's one true cheat code. It's when your interest starts earning its own interest. It's like a snowball rolling downhill. It starts small, but it just keeps picking up more snow, getting bigger and faster all the time. This is the magic ingredient, the secret sauce that turns small, consistent savings into serious wealth over time. And look, this chart really shows you the power of it. At the start, it feels, well, slow. That $100 becomes $200. Okay, nice. But then the growth starts to explode. It becomes exponential. That's the compounding kicking in. It's exactly like planting a tree. For the first few years, you barely notice it. But give it a couple of decades, and suddenly you have this huge, magnificent thing that grew from a tiny seed.
Okay, so if compound interest is the superhero, then inflation is the sneaky, invisible villain. Inflation is the slow, steady erosion of your money's buying power. A $5 bill today is still a $5 bill 10 years from now, but the amount of stuff it can actually buy will be a lot less. It's this quiet, constant force that's always working against you if you just let your cash sit around. Okay, next up, Section 3, your financial reputation. Let's talk about your credit score. Because like it or not, when lenders look at you, they don't see you. They see a number. A simple, three-digit number that basically sums up how trustworthy you are with money. And it's one of the most important numbers in your entire life. That number falls somewhere between 300 and 850. Think of it like a financial report card. The higher the number, the more lenders trust you. A great score in the high 7s or 800s means you get the best deals, the lowest interest rates on everything from mortgages to car loans. A low score? Well, it means you're going to pay a lot more for the exact same stuff if you can even get approved at all.
So how is this magic number even calculated? It's basically a mix of a few key things. But listen up, because they are not all created equal. The biggest one, by far, is your payment history. Do you pay your bills on time? That's huge. The second most important factor is how much of your available credit you're using. They call that credit utilization. You want to keep that number low. After that, it's things like how long you've had credit, the different types of credit you have, and how often you're applying for new stuff. It's not complicated. It just takes consistency.
Okay, this quote is a little blunt, but honestly, it's perfect. Your credit score is like a pet dog. Ignore it, and it poops all over your life. And it's true. You have to pay attention to it. If you take care of it, it can be your best friend, opening up all sorts of doors. But if you ignore it, well, things can get messy, fast.
All right, Section 4 is about riding the economic waves. Now we're zooming out from your personal finances to the bigger picture, the economy as a whole. Because let's face it, the economy is kind of like the weather. It has its sunny days and its big storms, and we all have to learn how to navigate it. And that brings us to the big scary word, recession. It sounds terrifying, right? But all it really means is a period where the economy shrinks for at least 6 months. It usually means fewer jobs and people spending less money. But the most important thing to remember is that it's a totally normal, predictable part of the economic cycle. They happen, and they always end.
I absolutely love this analogy of the economy as a party. The boom is when the drinks are flowing and everyone's having a great time. The peak is that moment late at night when the lights start to flicker and you know things are about to wind down. The bust? That's the sad, quiet music playing at the end of the night. And the reset? Well, that's the next morning with hope and some really overpriced coffee. The lesson here is simple. Enjoy the party when it's raging, but always be smart enough to set some money aside for the inevitable morning after. And that brings us to our final and maybe most important section, putting your money to work. This is the long game of building real wealth. Look, you have a fundamental choice to make. You can spend your whole life just trading your time for money, or you can figure out how to make your money start working for you. So how do you do that? The answer is investing. It's the only reliable way to beat that sneaky villain, inflation, and really grow your money. And it's not as complicated as it sounds. You can buy stocks, which are just tiny little ownership slices of a company. You can buy bonds, where you're basically loaning money to a government or a big corporation. Or, probably the easiest way to start, is with funds. These are like pre-packaged baskets of investments that give you a little bit of everything all at once.
But what is value anyway? Think about it. A plain old rock has almost no value to us, but a gold nugget? We see immense value in that. The thing is, their actual worth isn't that different. They're both just rocks from the ground. The only difference is the value we perceive, and that's a powerful idea. Creating wealth isn't just about accumulating money. It's about creating value, whether that's through a business, a skill, or your work.
And please, if you take away only one thing, let it be this. Wealth isn't built in days. It's built over decades. The single most powerful tool you have for building wealth isn't some hot stock tip or a huge income. It's time. The sooner you start, the more time that magic of compounding has to do its thing for you. It really is a marathon, not a sprint. So I want to leave you with this one question. Your money is never standing still. It's always working. The only question is it working for you or is it working against you? The choice is entirely yours.